Hello and welcome back to Market Watch HQ. Today we're talking about a topic that can make or break your investment portfolio: how the economy and world events affect the stock market. It's a complex relationship that every investor should understand, and we're going to dive deep into it. The stock market is influenced by a multitude of factors, but the economy is the most significant one. When the economy is doing well, businesses prosper, leading to higher stock prices. On the flip side, a weak economy can cause businesses to struggle, leading to a decline in the stock market. Economic indicators such as GDP, inflation rate, interest rates, and employment rate are closely monitored by investors to understand the economic health of a country. Let's take a closer look at GDP, the total value of all goods and services produced within a country in a given period. A robust GDP growth rate signifies a healthy economy, leading to higher stock prices. In contrast, a weak GDP growth rate can lead to lower stock prices. However, there are times when the stock market can perform well even when the GDP growth rate is low. For instance, during the COVID-19 pandemic, the stock market performed well despite a dip in GDP growth rate. Another economic indicator that has a direct impact on the stock market is inflation rate. A high inflation rate can cause stock prices to drop as investors worry about rising costs, leading to lower profits for businesses. Conversely, a low inflation rate is beneficial for the stock market as it keeps costs down, leading to higher profits for businesses and, in turn, higher stock prices. Interest rates are another important economic indicator that impacts the stock market. When interest rates are low, businesses can borrow money cheaply, leading to increased investment and growth. This ultimately leads to higher stock prices. However, when interest rates rise, borrowing money becomes expensive, leading to a decline in investment and growth, and ultimately, lower stock prices. Apart from the economy, world events also play a significant role in the stock market's performance. Geopolitical events such as wars, natural disasters, and political instability can cause stock prices to fluctuate. For example, the ongoing trade war between the US and China has caused volatility in the stock market as investors worry about the impact of tariffs on global trade. Similarly, the COVID-19 pandemic caused widespread disruption, leading to a decline in stock prices. Political events such as elections, trade negotiations, and policy changes can also impact the stock market. For example, when Donald Trump was elected President of the United States, the stock market initially rallied as investors anticipated pro-business policies. On the other hand, when Joe Biden was elected president, the stock market was initially volatile as investors awaited the impact of his policies on the economy. Consumer behavior also plays a vital role in the stock market's performance. Consumer spending and sentiment can impact the stock market significantly. For instance, during the COVID-19 pandemic, when many businesses were forced to close, the stock market took a hit as consumers reduced their spending. In contrast, when consumers feel optimistic and spend more money, the stock market tends to perform well. Individual companies and industries can also be impacted by world events. For example, the travel and tourism industry was severely impacted by the COVID-19 pandemic, leading to a decline in the stock prices of companies like airlines and hotel chains. Similarly, the tech industry was impacted by the US-China trade war, leading to a decline in the stock prices of many tech companies. In conclusion, the economy and world events can have a significant impact on the stock market. As investors, it's crucial to keep an eye on economic indicators and world events to make informed investment decisions. However, it's important to remember that not all events will impact the stock market in the same way, and it's impossible to predict the market's behavior with certainty. So, invest wisely, do your research, and stay updated with the latest news and trends. Thank you for watching, and we'll see you in the next video.